What is going on, everyone? Welcome back to another video, another day, another dollar with your boy. And we're going to be breaking down the futures contract real quick. And then I'm going to hit you guys with a potential swing trade idea that I have kind of brewing in my head. Now, it's something that is a little more risque, but you know, what's a market without a little risk in it, right? So we'll look at a somewhat risky trade idea. And then kind of review what my thought process is behind that and why I think I'm going to be taking that trade right now. Like maybe tomorrow I'll start the position and you guys will see what I'm talking about here in just a second. So if you guys want to stick around for that, please stick around. It shouldn't be too much longer. That'll be close towards the end. And then if you guys don't mind, leave a like down below. And, let's go ahead and get into it. So right now we're looking at our monthly time frame, all right? Now, keep in mind, we are looking at ES. What we'll be swing trading is going to be SPY options. Right now, we're looking at ES. So we kind of need to look at the lead dog and break down what's going to be happening or why we're looking at what we're looking at to kind of get a better idea of how the technicals are setting up. So right now, we are in a balanced market, meaning we are in an area of consolidation for the monthly time frame. By that, I just kind of use one time framing up, one time framing down, meaning making higher highs or higher lows, or lower lows, and lower highs. Right now, we have in the monthly, we've taken out a previous month's low. We haven't done that in the last several months. We're back into a balance by taking out that previous month's low. We took out last month's low, March's low, took that out. So we kind of put ourselves into an area of consolidation, meaning we can chop between both the 53.2275 level and the 48.7450 level, okay? So that's kind of what I'm getting at here. We could chop in between this level, which would be terrible for this trade idea that I have setting up. However, we'll look at that in a second. But it's best to understand that we are in a balanced market. That way we know where the risk is and where the reward is. Now, I have an overall target on the upside of 59.50. I got that target based off of fib numbers. Yes, I know some people don't like a fib extension, but I think it is sometimes very beneficial and useful to kind of gauge an idea. But even then, if we look at, I'll show you guys here in a minute my idea behind it, and how else I can get that number, and we'll look back at the charts and kind of back test a little bit on some of these areas. But right now we are in a balanced market. Look at the weekly. The weekly has been one time framing down for the last two weeks. This week being the third week, technically speaking, but we have yet to take out last week's low. We were in a balanced weekly range. We took that out 2 weeks ago. We started one time framing down. You see how we set lower highs and lower lows. Well, right now this might be kind of a kind of showing us that potentially we are slowing in trend, with this week being an inside week. So if we close out this week, moving forward, we may come out of this inside week to the upside or the downside, and we would monitor it for continuation. But right now, the weekly is still technically one time framing down, but you can say that the trend has started to slow a little bit due to the lack of push, right? We really haven't got much more of a push. We did not get last week's low, and we have yet to really get some type of extension to the downside in our daily time frames as well. So we'll look at that here next. But keep in mind, the weekly has been one time framing down, but this week has kind of shown a little bit of a slow in the trend by not taking out last week's low. So maybe buyers are stepping back into this market. Now keep in mind, from the highs, we've come down from the highs to last week's low 6% roughly, which is a healthy pullback. That's a good pullback in a bullish market, right? However, we could potentially pull back another 4%, which is where the risk is to the downside, and that may be an issue for the trade idea moving forward, and I'll discuss that here shortly. But from the high to the low to last month's low, or excuse me, not last month's low, but February's low, we have 8%. So technically, we have another 2-3% to the downside that we could go before we test that monthly balance low. Now, I'm not really looking for that, but we do have a potential to go and test that low. Now, from this low to the highs, back to the highs is a nice 6% return. So there is some return in this market on the upside, but risking just as much to the downside, roughly. Hopefully that makes sense. But you can see how we can consolidate inside this area, inside this range for quite some time. Now let's go ahead and look at the daily. So the weekly trend has been slowing. Now the daily's been in a balance. All right. We came back into a balance a few days ago. We just slightly stretched our balance high on the 24th or yesterday. Slightly stretched it only to roll back over, and then today gap lower and pretty much get near the balance low. So we're consolidating in between this 51.22 level and 49.91 level, just chopping in between here until we kind of get some type of break or move out of this. Today was a very, very good defense by the buyers, or for the bulls, as we did gap lower and we did have an opportunity to push. This is why another reason why I think maybe the trend to the downside might begin to slow. Not only did we not take out last week's low, we have not taken out the balance low, and we have tried not once but twice now to really get a good push to the downside, and yet to really do so. So we've pushed down, we've tested the balance low here. Now we are looking to come out of balance to the upside. Now this is where I want to get involved on this swing trade that I'm talking about. So potentially setting up after a nice little pullback, right? We could get a nice return back to the all-time highs. And with that return to the all-time highs, we could continue to grind higher for the next several months into that 580, into this 580, or the yearly target that I have up here, wherever it's at. Hold on, click the wrong thing. Right around this 59 or 59.50 level. Now, that is a pretty hefty move back up to the upside. But if we take our handy little tool here and measure from when we opened up this year. Okay, when we opened up this year, where are we at? From the low, when we opened up, so far we've had about a 9% move to the upside. All right. 9% move to the upside is a really good move to the upside. Now, if we measure all the way up here to this 59.50 level, 59.50 level, it's about a 21% return. Okay, about a 21% return. So for us, if we're buying down here, right, say we get back above the 50-day moving average, back above the 20-day moving average, we just take it from there. For us that are going to get involved, for me that's going to get involved on this trade idea, because I'm looking to buy the 580s or the 560s in SPY, we got about a 15% return to the upside here, which in options would be a significant return. So we got about a 15% move back to this high up here. Now, where am I getting this number? Why am I thinking about getting this number? Well, if we look back to 2020, let's go move the chart all the way back to 2020. Go all the way back to 2020. If we look at what happened in 2020, maybe it was 2021, excuse me. 2021. If we look at what happened in 2021, and we're in a similar situation, we're at all-time highs. We've had a pullback roughly from the highs, right? We set a high in February of 2021, and we pulled back roughly about 6%. Okay. Now from that 6% pullback, getting back above the 50-day moving average into the next year of 2022, which starts right around here, was a 25% return. Okay. Very similar situation that we have going on here, right? Had a nice little pullback, and then had a really, really good return to the upside. So I'm having the same idea, the same technicals in my head, or kind of setting up for the same trade idea here, right? We take the trade above the 50-day moving average, and we push up into that 580, 590 level on the options. So if we are looking here, I'm thinking maybe we take the August 30th expiration. We scroll all the way down here to around the 560. 560s are going for $1.98 right now. Okay, $1.98. The 580s are going for about 58 cents. Now let's just say we get near the target. Maybe by that time frame, we get near 560, 570 in SPY. Okay, we get near 560, 570 in SPY. It's just a gauge. It's not going to be completely accurate. But let's say we bought these at 58 cents. We've moved from, right around the 520, let's just say, for shits and gigs. And so we would move it closer to the money by about 40 moves here, or 20 moves, excuse me. So roughly we would be sitting around, maybe not this expensive, but I would say we would be sitting really close to right around $3, $4 per contract in the August, maybe even more so, depending on the volatility levels. And then if you look at the July 19th, you look at the same thing here, which would be a little less time, but you could look at the 560s for about 60 cents and the 580s for about 14 cents. Now you can see maybe there's some other people with similar ideas, as we have about 3,000 in open interest here on the 3,000 interest on the 560s and about 2,000 on the 580s. So we're not the only ones looking at this trade potentially setting up in the future. So could this be the trade of the year? Potentially. Now we got to keep in mind, we do have risk to the downside, right? We do have risk to the downside. From where we're at right now, we have about 4% to the downside before we test that monthly low, the balance low, right? If we get below that, we're out. We got to get out of that trade for whatever the loss is, whether that's zero or, just a little bit left on the contracts. Maybe they're worth 10 cents. Maybe they're worth 5. Who knows? But I think it is worth the risk, especially considering, right? Let's just say we are going to get out. Now we're looking at ES, so obviously the numbers are going to be a little bit more skewed. But let's say we get in up here where we're at, and let's say we were trading the ES futures contract with the same idea, right? We're getting long here to get that nice 15% reward to the upside, right? We're looking at 813 points to the upside that we want to capture. We're not going to get all of it. So let's say maybe we get let's say we're looking at about a 600. We want about 600, 550 points to the upside. Now on the downside, we're going to be risking about 250 points to the downside. If we bought today at the highs, we're looking at about 250 points to the downside. So still a really, really good risk reward trade to the upside. So that's why I'm looking at getting involved in this trade, why I think it is a good idea. Not only are we trying to get back above the 50 and the 20-day moving average, and we think the trend is beginning to slow. If we look here from the highs to the 200-day moving average, we're about, roughly 11%, right? And then if we look back from that year of 2021, from when we set that high to where we pulled back, we're right about that 200-day moving average was right about 10 to 11%. Now, there are other moves that are similar to this, right? There are other moves that are similar to this. And then you could also, I'm no professional. This is, just speculation. This is not a recommendation, right? So do what you will with your own mind. But with the extension here, fib extension, boom, boom. Look at where that 1618 is. Right around that 59.23 level. The 100 is right around that 55.65 level, or 560 or 5600, around the 100%. Now, if we do the same thing for the year of 2021. Where is it at? Where was it at? If we go similar situation, boom. Oh, that's the wrong thing I clicked on. Trying to remember what low I've clicked it or I used. I think I used this low, this high. Yeah, I think I used this low here, this high here, this low here. Now this is just a rough estimate, but look at where the highs were going into the 2022 year, right? Right around that 161 or 161.8%, right? So even then, still a really good kind of indication, or not indication, but just a tool to kind of give you that idea. Now, this is all speculation. I am going to be looking to enter a position based off of what I just told you guys. Does not mean I'm going to be correct, but I'm putting this idea out there for anybody that may want to entertain this idea and, you know, want to speculate along with me. So with that being said, ladies and gentlemen, I hope you all have a wonderful day. We'll catch you guys in the next one. See ya.